NIO just dropped 14% after a report came out from Citron Research saying the company is going to drop 48%. Should you buy NIO shares? Should you sell NIO shares? I'm about to do a deep dive into Citron's report, pick it apart and tell you where NIO is heading. You want to stay locked in? You don't want to miss this one. Welcome to StockFlix. This is the place where I provide all the information on the hottest stocks out there. Follow along for the journey and you should be making some pretty damn good money. Now I go out, do all the research and present it to you. I provide value to all my viewers. All I ask in return is that you hit that subscribe button, become part of the family here at StockFlix. We are growing as a team. If you don't know, we're talking about NIO today. Now NIO had a big drop yesterday in its share price after a massive run over the last few weeks. So it's pretty surprising to see NIO in the red. I actually produced a video the other day talking about how you rarely see NIO in the red and the investment strategies based off the back of that. Now, seeing NIO in the red raised alarm bells. You know, I was going about my day when the shares actually opened, it was up. It was up around the $54 mark. I was like, this is fantastic. Is NIO heading to $60 this month? And then we saw a slow decline right down to about $41 closing on the day. So if you have just invested in NIO in the 50s, don't worry. That is the game of investing. Stocks are volatile, they go up and down, but if you invest in value companies with strong growth fundamentals, such as NIO, you should be all right in the long term. So in this video, we're going to do a deep dive into why NIO has dropped and where NIO is going in the future. So let's jump into my computer screen. I want to show you a couple of things. So I want to kick things off by looking at the NIO share price graph. As you can see, NIO share jump up to about $54 early trading and tail right off to about $44. So this is pretty surprising for NIO. It doesn't really drop hugely in a day. Looking at a competitor, XPeng, who's had a fantastic run this week off the back of their earnings, exhibit the same kind of price movement. Nice jump up to about the $51 mark, and then the shares tail right off to about the $41. So if you got in at XPeng and NIO at the top of their trading yesterday, you would have lost about 10 to 15%. So what's happened? The market was up. The S&P 500, 1.36%. So after doing a little bit more research, a company called Citron Research, which are known for their short selling activities, came out with a report on NIO. And these guys are basically saying that NIO is too overvalued. Now let's take a deep dive into that report and see if there's any truth in what they're saying. So the first thing to note is that Citron are actually no strangers to NIO. These guys actually covered NIO when they were a $7 stock a couple of years ago. They were impressed by NIO at the time, but now they say that the company is too overvalued. So they start off by saying, after a rocky road of trading. Now, yes, NIO has had a rocky road of trading. If you don't know, NIO was trading about the $7 mark back in 2019. Then when NIO was on the brink of bankruptcy, it dropped down to $1.5 and almost went out of business. Now I know some of you watching invested around the time when NIO was about $2–3, which is fantastic. NIO then got funding after some government-backed institutions of about $1 billion in May 2020, and the share price started exploding. So yes, after a rocky road of trading, NIO has found itself in uncharted territory. Now this is where I disagree to start. NIO is not in uncharted territory. NIO actually delivered a standout 5,000 vehicles in October, a massive uplift on its performance last year and on the previous month. Now, NIO is got a fantastic brand in China. It's well recognized. Its cars are well received. They perform very, very well. NIO has got a lot of money to invest and expand and has got a very good future ahead of it. So to say NIO is in uncharted territory is completely and utterly wrong, in my opinion. So then they go on to say that this can never be justified by its current standing in the China EV market. Let's see if there's any truth to this. So if we take the market cap of NIO, this is a $60 billion company. Let's look at its deliveries for 2020, which is expected to be about 35,000 deliveries. Now let's compare this to Tesla, which is a $400 billion company, which is expected to do about 500,000 deliveries. So the value per delivery on a market cap basis for Tesla is 800,000. The market cap attributed to each delivery for NIO is about 1.7 million. So as you can see, it's pretty much double. So for Citron to say that it can never be justified by its current standing has some truth. The value attributed to each car for NIO is much larger than Tesla. These guys are operating in a very similar field. They have similar cars, but the value attributed to each delivery to NIO is way higher than it is for Tesla. So that as NIO increase their deliveries, obviously this number will come down to match Tesla's or close to match Tesla's. But yes, in terms of current standing, it does seem like NIO is a little bit overvalued on this basis. They then go on to say, or its near-term prospects. Now I think this is just completely wrong, because as we know, NIO is looking to expand into Europe in 2021, and if they're successful, this should boost their sales. They're coming out with new cars such as their EE7 sedan. Their battery swapping technology is well received, and they're looking to deploy 300 stations next year, which are faster and more improved than the current ones. And this is just a tip, because they also operate in China. Now, China are looking to have 25% of their vehicles by 2025 EV, and by 2035 to remove all gas vehicles. Now, this is huge. NIO are operating in a very good environment to succeed. So to say its near-term prospects, I don't think that's true at all. So they then go on to say that there's two main reasons why they believe that NIO's share price is overvalued. And the first comes from competitive pressure from Tesla. Now Tesla has its Model Y, which is a direct competitor to NIO's ES6. The Model Y, which is launching in China, is set to have a lower value. They are dropping the price, and they're dropping that price down to $41,000, whereas NIO's ES6 starts at $52,000. So on surface value, it would appear that Tesla is going to capture more of the market because their car is cheaper. They're going to have more demand, more sales, and there's going to be no sales for NIO. NIO aren't going to be able to compete with Tesla because their vehicle is too expensive. But after doing a little bit more digging and research into this isn't exactly true. If you know NIO has its battery of a service. With battery of a service, you buy the car and you lease the battery separately. This then lowers the value that you pay for the car up front. Now the ES6 model with battery of a service will be $42,000, which isn't too far off the $41,000 for Tesla's Model Y. The battery component, when it's leased, will be $140 per month. But as you can see, $41 versus $42 isn't a drastic difference, and consumers are not going to look at the $1 difference as any great magnitude. So this point that Citron are saying, for me, isn't valid. And ladies and gentlemen, this is why you should stay tuned into StockFlix. I've gone out, done the detailed research, and disproven a point that Citron are trying to fool its readers with. So even if the price of the ES6 is slightly higher than the Model Y, do remember that NIO have their battery swapping, and this is a convenient way for drivers to quickly swap out and change their battery. Now this has advantages over Tesla's Model Y. Also, users can upgrade their battery. NIO have launched their 100 kilowatt hour battery recently, but they're also coming out with their 150 kilowatt hour battery in the near future. So there are advantages of the ES6 over the Model Y, and there are price justifications for this. NIO also has a very different brand to Tesla, and NIO have some quirks within their brand, such as their mobile application, their mobile power charging service, where the driver will come out and charge their car for them, which have advantages over a Tesla car. So do bear this in mind, that there are price justifications. So moving on, further down the report, we have this massive red text saying last month Tesla sold more than double the number of vehicles in China that NIO sold. Now, it's pretty amateurish in a research report to have this bold red text. also the point isn't even that great. They're literally saying that Tesla has sold twice as much as NIO in the last month. So Tesla has sold 10,000 vehicles, NIO has sold 5,000 vehicles. You have to remember that Tesla is about 8 times the size of NIO on a market cap basis. Tesla is older than NIO, and Tesla is more established than NIO. So I think NIO has actually done well to produce half the amount of cars that Tesla has done in the last month. So by having this claim in red really doesn't add anything to their argument that NIO is overpriced, and I think NIO has done very well on this front. So that brings us to the end of their first point. Their second point is a lot shorter. They're saying it's the share structure, and they're saying that while we commend Bailey Gifford, love those people, again very amateurish of Citron Research, they go on to say, and other early investors, right now we're looking at the share structure and the investor base that is more interested in spinning a casino wheel. Ouch. So that right there is a direct blow at anybody who has NIO stock. They're saying that we as NIO investors haven't done our diligence and we are simply spinning a casino wheel. When we know that this is completely not true, we have done our diligence. We know that NIO is looking to expand into Europe next year. It's coming out with its new model, the EE7 sedan. They are also working very hard on bringing out more advanced power swapping stations. They're coming out with a new 150 kilowatt hour battery. They are also operating in China, where China have said that they would like by 2025 25% of their vehicles to be EV. The market is prime for NIO. The market is ripe for this company to expand and grow and explode. So to say that we are spinning a casino wheel as if we are just chucking it on red or black doesn't make any sense to me. It really doesn't. And that is pretty much the end of their argument. So I'm not really sure how number 2 was a point. They basically just said, we are betting. Yeah, not sure about that one, Citron. So in conclusion, they're going on to say that anyone buying NIO stock is not buying a company or its prospects. But this bit made me laugh, and it makes me laugh every time I read it. But rather you're buying 3 letters that move on a screen. It really does make me laugh every time I read that. 3 letters that are moving on a screen. They really don't like NIO. Yeah, the electric phenomenon is real, but there are better ways to play it. You see, you can tell that at this point in time, Citron are really just having fun with this article, you know. They're just putting in some jokes, you know, it's not very professional, and it's probably done a good job of wrapping up their argument and kind of displacing it. So I think we'll move on from Citron's research. I think it's pretty amateurish and a bit of a joke, if I'm honest. So then I did some further research into Citron to see if they've actually been right on any of their previous bets. And would you have it, they actually bet on Tesla. They bet on Tesla and Elon Musk. Now, looking at the article, Citron, this is 2016, they said that they believe due to Tesla's supply and demand problems, it should be down to $100 by the year end. So by the end of 2016, Tesla's share should be $100. This is perfect. As NIO investors, this is exactly what we want to see. We want to see if Citron have been correct in any of their claims in the past, especially for a company operating in the same environment as NIO, such as Tesla. So this $100 represented a 46% drop of the, at the time of reporting's price. So let's jump in and see what the price was and if Citron was right. So as you can see, in about 2016, this article is about May, Tesla's share price was about $43. Remember, Tesla had its 5-for-1 stock split, so on an adjusted basis, these guys were claiming that Tesla's share price should drop down to $20. So from $43 to $20. So if we scroll across to see if they are correct, no, $40, $38, $42. I mean, we've gone past, they said by the end of 2016, we're now into 2017. I'll give them the benefit of the doubt and do an extra year for them to see if, you know, their claims would materialize in the next year. $50, $60, $70, $60, $70. No, it didn't quite materialize for Citron. Tesla didn't even get anywhere near the $20 claim that Citron was saying. And if we just scroll across, see a few years later, Tesla's sitting at $400. Bearing in mind this is a company that claimed that Tesla would be $20. So again, just another thing to add there, that Citron really cannot be trusted with their research, and not much emphasis should be put on their report about NIO. So after doing some more research into Citron, you can see that they really do not have a good reputation in the market. So I wouldn't place your buying or selling decisions off the research report that they just released on NIO. Now on a final point, moving over to the NIO share price graph, as you can see, NIO has some very nice jumps, but what follows a jump is a dip. And it's about a 10% dip, this first one here in July. In August, jump up to 20, followed by another 10% dip. As you can see in October, jumps up to about $28. Again, another 5 to 7% dip. We had a massive jump up in recent times. Change the graph. Up until the $48 mark. And then again, another 10% dip. So on a trend analysis, 10% dips do follow the explosions in the share price that NIO has. So this, what we're seeing, is not uncommon. This is pretty much to be expected. And NIO has the resilience and it bounces back. So on this basis, I think there's nothing to worry about investing into NIO. So in terms of what I'm going to be doing, I'm going to be taking advantage of this new lower price point of NIO and investing some more money and growing my shares. I think NIO is a fantastic company with amazing future growth prospects. I think the earnings announcement coming out next week should be very, very good for the share price. And if the reaction to the Xpeng results are anything to go by, I think we should see a nice jump in the share price come the 17th of November. Should be very exciting and insightful to where NIO is going in the future. It's been a pleasure to have you. Thank you for watching the channel. Please do hit that subscribe button. We are growing as a family. It'd be great to have you as part of the team. I upload every single day. I do a lot of research and I come and present that to you as soon as I can. Have a fantastic day ahead and I'll catch you in the next one. Take care now.